something terrifying just happened to the global financial markets. In just 48 hours, over $3.2 trillion vanished. The Sensex crashed. The Nifty collapsed. The Indian rupee hit a record low. And the reason behind it? A military strike that may have just pushed the world closer to a global war. But here's the shocking part, while stock markets are bleeding, silver might be about to explode. Some analysts are even predicting $300 silver. So the big question is this the start of a market crash, or the biggest investment opportunity of the decade? Today I am going to break down exactly what is happening, why markets are panicking, and most importantly, what smart investors should do right now. Watch this video till the end, because the last part might completely change how you invest during crises. The spark. Following the February 28 airstrikes on Iran's leadership, the Middle East is in freefall. Retaliatory strikes have already hit Saudi oil fields and Dubai, signaling a shift from regional tension to total economic warfare. The oil time bomb, the Strait of Hormuz, is now the world's most dangerous choke point. With 20% of global oil at stake, the situation is critical. Supply collapse, shipping traffic has plummeted 80%. Uninsurable risk, insurers are abandoning vessels due to drone threats. Price shock, analysts predict oil could surge past $150 per barrel. Market crash, post-holy bloodbath, the damage, Sensex plunged 1,100 plus points, Nifty shed 500 plus. Technical warning, Nifty breached its 200-day moving average, signaling long-term bearish momentum. Outlook, analysts project a further slide toward 23,500. Sentiment, India VIX surged 23%, reflecting peak investor anxiety. The macro threat, rupee and oil currency crisis, rupee hit a record low of 92 rupees and 17 paise per dollar. The oil trap, India imports 90% of its crude. Every $1 increase adds 16,000 crore rupees to the import bill. The risk, if oil reaches $100, skyrocketing transport costs will trigger runaway inflation and stall GDP growth. The silver short squeeze. While markets bleed, silver is hitting a breaking point due to a massive paper versus physical disconnect. The paper market, futures and derivatives are now 50 to 100x larger than the actual metal supply. The conflict, there are exponentially more contracts than physical silver available to fulfill them. The outcome, a billionaire won short squeeze is building, potentially leading to the largest rally in history as the paper market collapses under its own weight. Investors are starting to demand physical delivery, but the exchanges are running dry. COMEX inventory, approximately 60 million ounces. Active contracts, approximately 800 million ounces. If every trader asks for their silver, the supply vanishes instantly. That is the definition of a short squeeze. Why April 1st could change everything. The India silver catalyst. India could trigger the next massive silver rally. Reports indicate a potential $385 billion influx into precious metals starting April 1st. If just 30% flows into silver, global demand spikes by 46%. This surge could send prices parabolic, with extreme forecasts eyeing $300. While the ceiling is debatable, the floor is solid, demand is rising fast. What smart investors should do? The big question, what should you do right now? Don't panic. Sell crashes feel scary, but they are historically the best buying opportunities. Keep your SIPs, mutual funds running. Lower prices equals more units. This is how you build long-term wealth. Diversify for safety in a crisis, move toward safe havens, gold, silver, and commodity ETFs. These act as a shield when stocks bleed. Comment below, if you think the market will crash more, write crash. If you think markets will recover, write bounce back. And share this video with someone who invests in stocks, because the next few weeks could be very important for investors. Subscribe to the channel for more deep market analysis. And I'll see you in the next video.